Hello, welcome to the European Open briefing for Tuesday, July the 31st. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. The Bank of Japan's policy decision is the major news this morning. There were expectations that the Bank of Japan would announce some scaling back of its asset purchases. That had seen the yen rising sharply over the past week, but the Bank of Japan today announced that it will be making some only minor tweaks to its policy to make it more flexible and more sustainable. We saw the Japanese yen falling after the decision, and it also boosted risk sentiment as it signaled more easy policy for the foreseeable future. Despite that lift, though, equity markets in Asia were mixed. We can see many indices closed slightly lower. In Europe, we also have a mixed open. Yesterday on Wall Street, shares were down as the slump in tech stocks continues to weigh on the markets. The dollar is mixed this morning. Although it is moving higher against the Japanese yen, we're also seeing both the euro and the pound also advancing against the greenback. And so are risk-sensitive currencies, particularly the Australian dollar, which is up by around 0.2%. We also had some Aussie housing data, which were mixed, but overall did lift the Aussie. Chinese PMI numbers were disappointing, though that is weighing on Asian markets a little bit. The New Zealand dollar is not faring as well as its Aussie counterpart. We had New Zealand business confidence falling to a 10-year low. The loonie isn't also doing as well. It had risen to 7-week highs yesterday on higher oil prices and optimism regarding the NAFTA talks. But then there were reports that the US rejected the Canada's participation in upcoming talks between the US and Mexico on NAFTA. So that signals that although the US is happy with how its talks with Mexico are progressing, they're still not very happy with Canada's how Canada is handling the talks, where it's taking a tougher line than Mexico. If you look at commodities, gold prices continue to drift lower, and oil prices. Yesterday, we saw a big surge in oil prices on concerns about potentially tight supply due to supply outages. Then there were data out showing higher OPEC output, so that is now weighing on oil prices this morning. Plus, we did have some news that Trump is willing to hold talks with Iran, which could also diffuse the situation between the US and Iran, and therefore potentially impacting oil exports. But if you look at today's major performers, we can see yen crosses are the best performers. Euro yen, dollar yen, all up at the top of the table, followed by Aussie dollar, and at the bottom of the table we've got WTI crude and gold. Let's now take a closer look at dollar yen. We can see those spikes earlier today. We saw dollar yen rising to a 1-week high of 111.44. So the Bank of Japan didn't announce drastic scaling back of its asset purchases as had been feared. They did introduce, though, forward guidance saying that they're going to keep rates low for an extended period of time, and they also made their yield curve control target much more flexible. Although they maintained the target at 0% for 10-year Japanese government bonds, the yield on the 10-year bonds at 0%, but they said they will allow it to fluctuate as needed. They also made the purchases of the exchange traded funds more flexible as well. So this signals that they're only doing this so that they can maintain the ultra loose monetary policy for a while longer, given that they're still way off in terms of meeting their inflation targets. The Bank of Japan did also publish its quarterly outlook on growth and inflation. We saw the Bank of Japan cutting its inflation forecast for the next 2 to 3 years. Let's now take a look at the euro, because we have seen the euro edging higher over the past few days. We can see it's currently trading around 1.17 1.27, moving back above the 1.17 level. We do have important data coming up later on in terms of second quarter growth for the euro area, as well as flash inflation numbers for July. So last Thursday we had the ECB meeting where Draghi maintained the very shallow rate path for Eurozone interest rates. But a day earlier, we had seen, of course, those talks between the US and the EU, where the two sides agreed to start negotiations on reducing trade tariffs. So that trade announcement has been helping the euro move higher over the past week, though given the ECB's outlook, any advances are likely to be very limited for euro dollar in the near to medium term. And a quick look at the Australian dollar. We can see, although the Aussie has been moving very much sideways over the past month or so, we can see the Aussie is sharply higher this morning. It got a lift from the Bank of Japan's decision, which overall lifted market sentiment. Earlier on, we had seen Chinese PMIs on the official manufacturing and non-manufacturing PMIs falling short of expectations, and data out of Australia on the housing market was mixed. We saw housing credit growth slowing to 4-year low, although building approvals did see a big 6.4% jump in June. So broadly, though, we're seeing the improved risk sentiment offsetting that mixed bag of data. We're seeing the Aussie currently trading around 0.7430 against the US dollar, and we've got more data coming up later this week out of Australia. We're going to have trade numbers and retail sales towards the end of the week. And looking at the rest of the day, apart from the Eurozone data, we're going to have personal consumption and income and the core PCE price index out of the US, as well as monthly GDP numbers out of Canada. That's it from me. Thank you very much for watching and have a great day.